So in the next 12 days, we are going to see a major shift regarding inflation. Now, it doesn't mean that inflation is going to go down. It doesn't mean inflation is going to go up, but it could go either way. Now, we could see inflation continue on its downward trend, or it could go back up. Either way, we're going to have answers very soon. But what is happening? Well, I'll get to that in just a minute, because today we need to address something else. And this is also taking a toll on inflation. And it's going to have a major impact as far as what the Federal Reserve decides to do and whether or not they decide to raise rates or decide to take a pause. Now, here's what happened today. Today, the PMI report came out. And in this PMI report, which is the Purchasing Managers Index, PMI is a good economic indicator, which is designed to provide insight into a business's condition, whether it's charging more, charging less, what's going on, right? And so we got some news out today, and I want to go over that because in the most recent PMI report, which came out today, manufacturing came in at 50.4, which is actually higher than the expectations were. Services came in at 53.7. Now you're probably thinking, well, what is 50.4? What is 53.7? Well, if the number is over 50, then it shows expansion. When the number is under 50, it shows contraction in the business. So these are good indicators. And again, manufacturing is very close, but services came in 3.7 points higher. That means that, again, things are showing that they are expanding. Now, the major problem with these numbers is that the Federal Reserve is going to look at this. They're going to look at this PMI report, and especially in the services sector. And based off what they are seeing, it is prices are still going up. Now, this is what everybody's going to be looking at when it comes to, in just 12 days. And again, what is in 12 days? Well, in 12 days, it's May 3rd. Okay? Here's why May 3rd is such an important date. On May 3rd, this will be the second day of the Fed's FOMC meeting. And in this meeting, we are going to find out whether or not the Fed is going to continue to raise rates, or are they going to take a pause, or, which is very unlikely, we would see them cut rates. I don't see that happening. Now, according to market expectations, at this point, according to 3 out of the 5 Fed presidents, they believe at least one more rate hike is in the cards. They believe that on May 3rd, they're going to see an additional 25 basis point rate hike. However, that might not be the end of rate hikes. And the reason for this is to continue this downward pressure on inflation. Again, because the American people, we just can't continue to pay these exorbitant prices for everything. Food, gas, utilities, right? Rents. Even though rents are starting to come down, or we're seeing some, it's starting to moderate, it is still hurting the American people, and this is a major problem. Now, it's because of this, all the expectations, the Fed presidents. Because of this, the expectation is that we're going to see another 25 basis point rate hike. But here's the big news. There's a good chance it doesn't stop there. Some people were originally expecting we were going to see a 25 basis point rate hike, and then the Fed would pause rates. It wouldn't see an increase, it wouldn't see a decrease. It would stay at 5% for the rest of the year. At this point, after we're starting to see some more upward pressure on inflation, the Fed might not be done. Because one thing that we don't want is for the Federal Reserve to continue to raise rates as we see inflation drop, and then the Fed pauses, but inflation, instead of continuing its downward trend, instead it turns around and goes back up. That's the last thing that we want to see. So, as a result, some are saying that we could actually see something stronger than a 25 basis point rate hike, but there's a good chance that this is not the last rate hike, and it will all come down to what's going to happen over the next month. What are we going to see as far as inflation? What are we going to see as far as the jobs report? Wages? Is there a wage price spiral? All these things are extremely important. And again, if this happens, okay, and if we see rates are continue to go up, what's going to happen is this is going to put more pressure on the U.S. economy. This is going to put more pressure on banks. Banks are really going to feel the pressure because lending is going to get even tighter. We know credit card debt is wreaking havoc on the American people and on their budgets. But as rates increase, chances are your credit card payment is also going to increase as well. And at some point, all these additional increases, this prolonged inflation, the savings rate being at record lows, the problem is at some point this is going to crash parts of our economy. And this is something that I haven't talked much about lately, is that certain parts of the economy are seeing that they're getting hit much harder. The lower income households are really getting hit when it comes to inflation. We know that. Well, what about lending, right? What's happening there? Well, a lot of people aren't going to get a loan. They don't want a loan, or they just can't get it. When it comes to paying for a car, right now what we're seeing is lower income households, or mainly those with lower credit scores and a limited credit history, those people are actually seeing their repossessions for their cars. It is surging. So these are all just little things that are happening within our economy. But again, and some people come on and say, "Oh, don't worry, we're not going to see repossessions of autos." Well, we are seeing it. It's happening. It's just not happening in the upper middle class or the upper class. They're not seeing repossessions. It's the lower income families, the middle to lower income households. Those are the ones that are seeing repossessions. Those are the ones that are being evicted. Those are the ones that are getting their credit cards closed. Bank accounts are closing them simply because they don't want to take the risk. They've been a risk already. They want to take their money, get out of it, get their asset back, whether it's a apartment, whether it's a house, whether it's a car, whatever it may be. They want to get it back so that they can handle it. They can determine what happens with it. So again, it's interesting what's going on right now, and I just wanted to bring this up and talk about the PMI report, talk about what's coming up on May 3rd, because even though you may not think that the PMI report or what is going to happen regarding the Federal Reserve and inflation, you might not think this is much, might not think much into it, but again, this is going to impact every single one of us. It doesn't matter if you are, it doesn't matter if you're a business, doesn't matter if you work for a grocery store or a large legal firm. Every single one of us is going to be impacted because of inflation, because of wages, because of gas prices, right? Because of our leaders within our government and Congress. Everybody's going to be impacted. It's just a matter of time. So, if you have any questions whatsoever, please ask your questions down in the comment section below. Again, just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.